So long-term capital is 80. How much is your exemption to 54 EC if I invested 13 REC bonds? இன்னொரு ரவுண்ட் டிஃபன் கூட்டு கஷ்டம் டக்குன்னு. So 80 minus 30, 50, right? So you have to apply 12.5% of 30. One calculation is over. Right? No problems at all. Now comes the next interesting point. What is 112(1)(a) saying? You calculate the tax payable as if there is no amendment in section 48. Now, if there is no amendment in section 48, in the provisions of Income Tax Act, if I invested 13 REC bonds, how much exemption I'll get? I only put 30. But if the change had not taken place for my long-term capital gains of 27.4, if I invested 30, how much I'll get? 27.4. So that means tax payable has to be 0. But how much 54 EC will be there in your computation sheet? Those who have been filling up ITR will know. As per that, what is your exemption? 30. You have put 30, 80 minus 30, 50. That will enter in your total income statement as a long-term capital gains, right? That is your 54 EC. But no, while calculating tax payable, first equation which Infosys is breaking, it says, should I have to give exemption? If I had to give exemption, should I have to give 30 or 27.4? Because this change was made only in 112(1)(a), and therefore, should I have to give 54 EC under the old capital gains tax regime for calculation of tax payable? We have to wait for the utility to come and how going to decide. But anyway, what I've attempted, at least not from the point of view of how this software is going to work, common sense. 100, 20, 80, I've invested 27.4, therefore I'll get 27.4. Taxable capital gains 53.6, tax at 12.5%, 6.7. Whereas under the old capital gains tax regime, 100, 72.6, 27.4. For an investment of 27.4, my taxable capital gains becomes 0. Tax payable is 0. Therefore, despite investing only 27.4, I may defeat the change of the provisions. Is that intended? The answer is no. 100% no. Is that the way it's going to be executed? We don't know. Now the problem for Infosys now, till 22nd July 2024, they have to design the software in such a manner where the calculation becomes 27.4. So if it is after that, it has to make a different working. And if you are a non-resident, it has to make a different working. If you are a firm, it has to make a different working. Now, all the IT software is working. See, then what is the problem is like they don't know how to, every time it throws an error. Error is not with them, unfortunately. We made the simplification in such a manner where this task, software is finding difficult to perform. It's just the beginning. So if it already been, then I have my soul. If we are already up to this particular point, if you find this discussion to be very good, best is yet to come. If you already started feeling, I can 100% guarantee worst is yet to come. That's your point of view. Now, there comes a slightly next point. I've taken the number as 100. The cost of acquisition, we just try to take it as double so that it becomes 40. So 100 minus 40, 60. After indexation, there is a loss of 45.2. Can you carry forward the loss? Number matto I changed. After indexation, there is a long-term capital gains of 45.2. So what is your taxable capital gains now? Taxable capital gains is 60 only. Will you get the loss of 45.2 carry forward? On a plain reading of law, no. Because we have not changed the computation section at all. That means I was one of my client started selling ESOP shares of a multinational company, thinking that capital gain she can set off with this loss. I asked her why. She said, one of my friend told, one of my WhatsApp university told, one of my chartered account, ellarum soltaanga avanga. But I said, who said? No, that's what everybody says. But that's not the law. Did the law say that? The answer is no. Because no change in 48. That means your capital gains is only going to be 60 lakhs. And you cannot carry forward the loss. You do the reverse. In fact, you have to pay 12.5% of 60. And there is also going to be a surcharge of 10%, assuming that he has got no other income. So instead of for a capital gains where he has got a loss. But however, this will apply only in the case of non-resident. But still for resident, at least what we can say, that we can make a claim like this. Carry forward is not allowed. At least we can say the tax is zero. So poor non-resident, he has to pay tax on this despite making a loss. At least for resident, one thing we can say, he doesn't get the benefit of this 45.2 of loss, but at least his tax payable is zero, because tax on 45.2 before the change is zero only, no. I think that they have not changed. So therefore, at least resident kept a small solace there. At least my tax is zero, no problem. But if you are trying to plan to sell the asset to get a loss to adjust against your capital gains, you are gone. But sometimes the mathematical beauty which I was talking about, so take this very easy for a non-resident. Take the same example for a non-resident. He has to pay 7.5 of tax. No carry forward. But since this concessional tax treatment is not available for non-resident, for a capital gains where he has incurred a loss, we have to tell him you have to pay 7.5 of tax. And just assume his friend has sold the same asset, the next flat, his friend told. Normally we always follow somebody, no. One non-resident sold the property on 20th July. For him, there is going to be a long-term loss of 45.2. Same flat is sold 2 days later by his friend or his brother. For him, we are going to come back for the same flat, we are going to say you have to pay 7.5 tax. I don't know, some of you would have experienced this. When you apply for low deduction certificate for a joint property owners, husband will get or wife will get first. For the same property, the other spouse will not get. நாங்கள் எப்படிலாம் சமாளிப்போம்னா இல்லைங்க நாங்கள் வந்து we follow the policy of women first, women empowerment. ஆனால் அவங்களுக்கு ஃபர்ஸ்ட் கொடுத்துருவோம், உங்களுக்கு வெயிட் பண்ணுங்க அப்படின்னுவோம். Now, let's assume it's a joint property for some reason or other, two properties, husband, wife, two different properties. Husband sells on 20th July, wife sells on 25th July. For husband, he will come back and say, look, you will get a carry forward loss of 45.2. For wife, you will come back and no, you have to pay a tax of 7.5. You are a male chauvinist. So, Mary, some interesting insight. Now, so again, take the case of a non-resident. Same example. Can he invest 27.4 and claim exemption? The answer is no, because for him, indexation option is not there at all. So he has got a long-term capital gains of 80. If he wants to make it a zero through 54 EC bonds, he cannot do it. Maximum he can put 50, still he will end up in paying tax. So this I will skip on account of the time factor. So I will just leave the slides so you can. Now what will happen in this case, in the case of 54? That's a very interesting one, provided you are convinced about. Let's take the same example. How much you should invest in this particular case in 54F? Just to find out how much I've reached you. Test for you. 100. Why? Total. Super. So therefore you say 100 you have to put. That's what, that is in this particular example, if you are an individual eligible resident, you say you should put 100, right? Now, 54F is a beautiful, very interesting section. That is the one section which provides for a proportionate exemption, right? Now, if you take this particular case after indexation, what is the capital gains tax proportion? I've taken the number as 100, so that percentage calculation is very easy, right? How much you are invest in? Now, the capital gains proportion after indexation is 27.4%. Without indexation, the capital gains percentage is 80%. Now, for the same investment, if your capital gains proportion is more, your exemption will be more without any additional investment. Take a simple example. I have original shares and bonus shares. Original shares has got a cost. I have to index it. It may not be 100%. For bonus shares, the capital gains will be 100%. If I invest out of bonus shares, I will get full exemption, though it is a proportional exemption because profit and sale value are same. Therefore, one simple mathematic beauty about 54F. If your capital gains is more, your exemption will be automatically more. Before that, get sure whether you are convinced with this particular point. The 54EC one point we did know. Are you convinced on this point on 54EC? Are you convinced on this point? If you are convinced on this slide, listen to me. If you are not convinced on this slide, no problem at all. So now, assuming this particular case, what does the law says? You calculate the capital gains and tax payable as if there is no amendment and work out the tax. If that tax is lesser, you can do it. That's what I have done. 54EC, if I put 27.4, I may have a tax payable to the new capital gains tax regime. I may not have the tax payable under the old regime. Therefore, I am escaping. Same thing I am trying to apply. Now, please understand, for the sake of clarity one more time, there is no indexation benefit available for computation of capital gains. Right? Let's be clear about this particular point. I'm just writing it up in the IT. Right. Here, if I had to make it as 0, what should be my 54F? If I have 54F for 27.4, my tax bill becomes 0. My exemption is 54F, 27.4 means taxable capital gains 0 under the old capital gains regime. Tax payable is 0. I don't want more than that. If I had to get the 54 exemption of 27.4, what I have to do is 27.4 into 100 by 80 is what I should invest. That means if I invest 34.5, my exemption will be 34.5 into 80 by 100, 27.4 will be my 54F for my new capital gains tax regime. That will come to 27.4 if I put 34.5. But if I get 27.4, my taxable capital gains becomes 0. That means I don't have to put 100. Not that they've intended to give this benefit. I think Vijay Reddy kon tali sir. You are not getting it. Now what you are saying is that you should invest 100, then only you'll get full exemption. Because 54F once net consideration will be invested. So if I put 100, my capital gains become 0. If I put 90, it will be 90 into 80 by 100, 72. If you put 80, 80 into 100, it is 64. If it is 70, 56. Right? Under the old capital gains tax regime, how much 54F I need? Only 27.4. Right? If I get 27.4, go to the second column, 54F 27.4, taxable capital gain 0, tax payable 0, right? So therefore, I don't need 80 of 54F. I need only 27.4. So to get 27.4, what I should do is I should invest 27.4 into 100 by 80, which will come to 34.5. As against my friend's statement, you have to put 100. Inadvertently, when you remove indexation, your 54F will automatically go up. Not I want to give this. I want to touch something. When one door is closed, another door gets open. So therefore, there is a window of opportunity suddenly comes here. Earlier, I should have put 100 under the old capital gains regime to get 27.4. Today, if I put 34.5, I will get an exemption of 27.4, that will make my tax payable 0. Extraordinary mathematical beauty unintended. எனக்கு இதெல்லாம் பேசுறதுக்கு ரெக்கார்டிங் வேற ஆயிட்டு இருக்கு. இதை தான் அமெண்ட் பண்ணிட்டு போறாங்களோ ஒரு பயமா இருக்காரு. So in fact, buyback, I spoke about buyback before that amendment and 6-7 forums. But I don't know, I'm not saying that, but after that the amendment came. After that, sometimes you also don't know whether to talk on certain points or not. So this is a very interesting point. I think some of you have not got it. I think you have to go and take this slide. It's a real mathematical beauty. You just calculate this with 34.5. And for just the sake of simplicity, you get as 40 is more easier. If I put 40 in another residential house, my exemption here will be 40 into 80 by 100, which will come to 32. If my 54F is 32, take the second one, LTCG 27.4, 54F, it is going to become 32, means restricted to. We are not going to be that greedy to ask 32-point exemption. Last, no, we will not ask. So we'll take 27.4, make the tax payable is 0. For 30, it is 24. For 34.5, it is 27.4. Instead of investing 100, because of this scheme, I have to put only 34.5, which is a great benefit. You can claim the credit for bringing this innovation. So you were saying that you should also get some tax planning tips, which has been given. Right. Now, take this one. Before that, I just want you to go through this particular point. Take 1 or 2 minutes time to read this. Third line and fourth line. So when this option is available, a transfer of long-term capital being a land or building or both, which is acquired before 23rd July 2024, right? Which is acquired before 23rd July 2024 with the permission of my mother. I'll use that as an easy example. My mother expired on 10th September 2024. Assuming she had a property and she said, say, I generally talk to her every day morning between 4 to 5. Coffee with mom. So she says, every year for years together, both of us talk. This property I don't want to give to other family members, only exclusively to you. So I inherited the property. 10th September 2024, she died. Is it possible for me to acquire that property before that date? 100% no. Because she is alive till that date. Let's assume all the legal process got over on 1st November 2024. So I got the property in my name on 1st November 2024. My family says, hey, சும்மா அம்மா சொல்லிட்டா நீ சீரியஸா எடுத்துக்காதடா, ப்ராப்பர்ட்டியை வித்துட்டு நம்ம எல்லாருமே 5 பேர் ஷேர் பண்ணிக்கலாம். Even I said, no problem, share பண்ணி. So I want to sell the property. Now, can I get property sold after 23rd July? No. Therefore, no indexation, right? There's no doubt about it. But will I get, at the time of calculation of tax, will I get that option of 20% after indexation? ரொம்ப டக்குன்னு அப்படி தலையாட்டு சார். நான் உங்க அசஸிங் ஆஃபீஸராக இருந்தால் என்ன சொல்லுவேன் பாருங்க. ப்ரொவைடட் further, in the case of a transfer of long-term capital, being a land or building or both, which is acquired before 23rd July 2024. Correct? When did I got the property? After 23rd July 2024. So therefore, assessing officer will come back and say, you are not eligible for this. Now I can understand what you are saying. If I inherit the property for the benefit of others, why my friend is nodding? He's a good chartered accountant, so therefore he nods, but he also logically thinks. I'll tell you why he's saying this. If I inherit the property, cost of acquisition will be taken as cost of the previous owner. Holding period of previous owner should also be taken. Let's assume my mother bought this property in year 2000. I should take cost of my mother. I can also take the holding period of my mother. If she has done some improvement to the asset, I can take that also. So therefore, for all practical purposes, his mother's capital gains computed in my hands. Therefore, my friend immediately nodded. No, you can get, what's this question here? What a stupid question. But the problem is not that. Say indexation is not available because I sold after 23rd July 2024. So therefore, I don't get indexation. To get this concessional benefit, the section says, which is acquired before 23rd July 2024, the assessing officer will come back and say, T.G. Suresh, when did you got the asset? After my mother's death after 10 September 2021. Thank you, sorry. So you may say it has to be logical. But we already know in 49(1) cases, consistently for the last 30 years, we have been fighting a legal battle that indexation provision says year of transfer divided by year of acquisition. Department has consistently taken a stand. Year of acquisition is particular case, year of acquisition by you, not the previous owner. They might have lost the legal battle in many forums. That's a different story. But they've created the controversy for the last 30 years. Before in Manjula J. Shah, Bombay account should take a stand. Denominator should be based on the previous owner. Arun Shuglu Trust. We can talk about many case laws. But here we are talking about simplification to reduce litigation, which has not happened. Ideally, what they should have said here, acquired before 23rd July 2024 by the assessee, and in cases covered by 49(1) by the previous owner also. That is something which they should have done. Now, I will tell you the problem for Infosys now. They don't know how to handle this. Should I have to put, if I put inherited property, how should I handle this? Likewise, they have so many permutations, combinations of this capital gains to be done, which is extremely making the utility very difficult. I think we should also give them a fair amount of this thing because, see, the idea is good. There's no doubt about it. The simplification idea is fantastic, but it is resulting in something which, what I'm discussing today, very honestly, only taking into account the overall segment of the crowd. I'm thinking this is not a full CA crowd. Therefore, I've diluted. I'm taking only 1% of what is there. This is a highly diluted version I'm doing. Because I just want to keep people who are new to the subject also in focus. Right? So, this is one very interesting part. So, still, no, for your question, anyhow, I asked my mom. She never had any property and all. Plus, I am not, or my family did not inherit. I asked my mom, hey, income tax, change I don't want to leave a legal battle to you. So, அதனால ஒரு 4-5 ஃபிக்ஸட் டெபாசிட் போட்டு எடுத்துங்க எல்லாரும் சந்தோஷமா எல்லாருக்கும் நாமினேஷன் போட்டு விட்டேன் அப்படின்னு. அந்த ஃபோர் சைட் எனக்கு ரொம்ப புரியவே இல்லை ஆக்சுவலா. இந்த மாதிரி ஒரு சேஞ்ச் நடக்குன்னு அதை யோசிச்சு she has done it. Now, the option is available for land or building acquired up to 22nd July 2024. What is the meaning of acquired? Let's take a simple example here. So you purchased a property, taken over the possession before 23rd July 2024. The registration of this property happens after 23rd July 2024. Obviously, நீங்க இதை நான் கனெக்ட் கூட பண்ணலாம். 23rd July 2024 ஆடி மாசம். கரெக்டா நம்ம ஜூலைல இருக்கிறதுனால ரொம்ப ஈஸி ஆயிடுச்சு ஆக்சுவலா. 15th ஜூலைக்கு அப்புறம் நீங்க பார்த்தீங்கன்னா நார்மலா this time it's slightly late. So therefore I said I paid the amount, I'll take. நான் இன்னைக்கு ஆக்சுவலா வந்து லாஸ்ட் முகூர்த்தம் is on 14th July 2024 this year or 25. So 14th July 2025 somebody says I'll take registration, I'll do after August 15th ஆடி மாசம் over, but portion கொடுத்துங்க முகூர்த்த நாள் புரியுதா? Same thing you apply in the last year. 14th July 2024 possession taken, registration takes place after the aadi month is over. So now, please come to a conclusion. How do you deal with this? See, look from the point of view of the seller. He would like to get the benefit of indexation, no? So therefore, he says, I given over the, he's also happy with this. I have sold the property because possession has been handed over to you. Sale is complete from my point of view because I also paid you the consideration. So therefore, For me, sale is over before that date, I will get the indexation benefit. You as a buyer, subsequently when you're going to sell this, can you say this property? See, you must understand, a lot of people will ask me the question, why they notified index number for this year? Indexation have they taken? Index number has been notified because even if you sell after 10 years, so long as they continue the tax payable option available, index numbers have to be notified. No, that's why the index number is notified. Notified for the restrictive purpose of calculating the tax payable only. So therefore here, can it take a stand that acquisition of this property from my point of view is before this date, 23rd July 2024. Therefore, can I get both 10% without indexation and 20% of indexation for calculation of tax? Seller also might take the same thing. I've sold the property before 23rd July 2024. You can be rest assured. Once you sell, what is the date of sale here? That is the question. Date of transfer is what date? Is it before 23rd July or not? So it's very easy for us to come back and say it is already over by that time. This will definitely go to result in litigation for the simple reason. You know that this is going to be part of information shared by the registration department with the income tax department. They will put this property has been registered after 23rd July 2024. Therefore, there is going to be mismatch between what you say as a date of sale and what you claim as a date of sale. Reporting authority says the date of sale as a registration date. You are going to give a different date and therefore you might have a challenge. Yes, Vijay Reddy. Yeah. See, the question is 247.5 read with 53 itself has been questioned by the Supreme Court on a different basis. I think that will be going on a different dimension here. But the point here is that settled by whom? I think they could have simply come back and said, do you have a board circular? Not there, no. So long as that's not there, there is going to be a litigation is what we have to understand. For your point, the scope of it, I fully agree with you in terms of all ingredients of sale is over here and therefore ideally the date of sale should be there. But of course, how far if I'm the assisting officer will I accept? The answer obviously no. I'm very clear. If I'm the assisting officer, I'll come back and say you fight in the litigation, get it. For me, registration only as per the Indian Registration Act, read the transfer of property, the property transfer is complete. You go and fight. So the idea began is to simplify. How it is not resulting is what we are trying to come back. Let's take the fourth situation. If the capital asset is converted into stock in trade before 23rd July 2024, but the stock in trade is sold after 23rd July. Take a very simple example. I sell the stock in trade today, which is 8th July 2025. If a stock in trade is sold after converting that from a capital asset, both capital gains and business income will arise only when stock in trade is sold. Capital gains will also arise only in the year of sale of stock in trade. So therefore, can the department in this particular case come back and say, look, you are not going to come under the old capital gains regime at all. You will come only under the new capital gains tax regime. Is the question. Now, if the capital asset comes to stock before 23rd July 2024. Now, look at the provisions of section 2 subsection 47 which defines the transfer. Transfer as per 247 clause 4, when your capital asset is converted into stock in trade, on that date, transfer is complete. 45(2) only postpones the capital gains tax, but it does not change the transfer. Just go back to our first discussion. If the transfer is up to 22nd July 2024, you have to calculate capital gains only under the old capital gains tax regime. Up to 22nd July 2024, if the transfer is complete before that date, capital gains is only under the old capital gains tax regime. So what 45(2) or 45(5) tries to do is it only postpones the year of taxability of capital gains. It cannot by itself. Take the indexation at that point of time. No, you have to take only the index on the date of conversion of capital stock in trade. So therefore, yet another interesting issue here will be, both in the case of conversion of capital stock in trade and compulsory acquisition, transfer date and year of taxability are different. Therefore, if the transfer date is before 23rd July 2024, even if the capital gains happens after 3-4 years, there are many properties that are going to be acquired for the purposes of your new airport, metros and all that stuff. Once the property is acquired, transfer is over. But taxability arises only when you are in receipt of compensation or when you sell the stock in trade. So long as that event has actually happened before 23rd July 2024, you have to compute the capital gains only after indexation only. And this is one reason why index numbers are notified for the current year recently. So you should know why they are trying to give it, because old capital gains will have this same thing. Now, so whether this withdrawal of indexation has ended some controversies. So what are that one? So main point is that this we already partially discussed. So look at the definition of index cost of acquisition. The cost of acquisition, the same proportion, the cost inflation index bears the cost inflation index for the first year in which the asset was held by the assessee. So therefore, if you get by property by way of inheritance, see the section for yourself. If you get by way of inheritance, just take the same example. I got the property for my mother and sold in the same year. Income tax department is saying your numerator denominator should be same, because year of acquisition of us by the assessee is this year. So therefore, numerator 2024-25, denominator 2024-25. This is what department has been arguing for years from 93-94. Now, if indexation itself has been removed, obviously this controversy does not arise. That's what all of us will think. But this controversy will still remain, because while calculating tax payable, what are the law says? If you are an individual or HUF resident in India, you have to compute the capital gains after indexation the same manner in which asset existed. So what the assessing house will come back and say, look, that wording we have not changed. No. So therefore, while calculating 20% tax, the assessing house will come back and say you are not eligible for indexation. Now you can think the foresight of my mother. Why she did not leave land or building? Because she doesn't want us to face litigation, no. So that's what you have to admire. Right. So therefore this controversy will continue, therefore it appears not to be continued. One definite controversy which has been eliminated will be interest. You take a housing loan and buy a property. Can I capitalize the interest on housing loan? So one Chennai bench of tribunal took one step to say that even if you have claimed 24B, interest can still be claimed. After that section is amended now. What section says? If you have interest you have already claimed in a house property or any other head of income, again you cannot claim as the cost. But otherwise there is no problem. So if you are not claiming, assume for a moment you have gone in new tax regime. So 24B is not available for you. So therefore that interest on housing loan which you are not able to claim because you are a new tax regime, you can add it to the cost of acquisition. So I am paying interest for the last 20 years. All the 20 years interest gets added to the cost. Now let's see what is the indexation provision. It says index of the year of transfer divided by index of the year of acquisition. I purchased the property in 2001 and paying interest for the last 24 years. I have not claimed this interest as reduction. What will happen? All the years of interest will go add to the cost of acquisition. And then how can I index? I can index my 23-24 interest, 22-23 interest based on 2021-22 because the language section says year of transfer divided by year of acquisition. I purchased asset in 2001-2, paid interest for all the 20 years. All this interest goes to add the cost of acquisition. That means inadvertently I will be getting interest indexed right from year one. We all know that was not intended. That is the effect of this provision. So that by saying you are not eligible for indexation, we have removed that controversy. ஏன்னா நீங்கள் கேட்கலாம் ஆக்சுவலாக எங்கெல்லாம் இது வந்து இல்லை இந்த சேஞ்சில் ரொம்ப சிம்பிளிஃபிகேஷன் சொல்லும்போது எங்கேயா நீங்கள் 2 சொல்லக்கூடாதா அப்படின்னு சொல்கிறதுக்காக ஐ ஜஸ்ட் தாட் ஐ ஷுட் ஷேர் 1 or 2 some controversies settled அப்படின்னு. So again, these are all some controversies. What will happen if you make the payment installments out index and all? So I'll just take only 2 minutes on this particular point. If you just take where the changes have taken place, not in the first list, not in the second list, go to the third one. Any other capital asset, from 36 months it has become 24 months. Now, what if you are going to have certain funds which do not qualify as a debt fund? Now, units of UTI, units of equity oriented fund, no change. Now, suppose if you are going to have a gold ETF. So, 36 months it has become 24 months. From which date? From 23rd July 2024. So, suppose if somebody is holding a gold ETF and had it been sold on 22nd July 2024, 36 months is what is required to become long term. Suddenly they say 1 day later, the same capital gains now becomes a long term capital gains. Because these provisions have been made applicable from 23rd July 2024. In the same year, normally on the 20th with the short term, 24th with the long term irukka mudiyuma na general. I sold after 4 days. இந்த இயர்ல மட்டும் நடக்கும். நம்ம நேரம் வந்து ஆஃபீஸில் வர பசங்களை தயவுசெய்து பார்ட்னர்ஸ் சிட்டிங் இயர் பசங்களை அனாவசியமாக கோச்சிக்காதீங்க. என்னடா டே முட்டாள்தமாக போகிறேன், 10th July வந்து ஷார்ட் டர்ன் போகிறேன், 1st August வந்து லாங் டர்ன் போகிறேன். சார் அதான் சார் லா. அது மாதிரி we have some very interesting, suddenly it's a welcome benefit, we take it, but there are other beautiful consequences. I don't know whether there will be time there, but this I will take it because this could be of some lot of relevance to all of us. So short-term capital gains up to 22nd July 2024, 15%. From 23rd July 2024, 20%. 112A, 10%, 12.5%. 112, 20% out indexation, 12.5% without indexation. Threshold limit, 1 lakh to 125. All of you by this time should be familiar with this particular point. இந்த ஸ்லைட்லாம் போட்டு உங்கள் டயத்தை வேஸ்ட் பண்ணாதீங்க சார் அப்படின்னு நினைக்கும் போது சின்ன ஒரு பஞ்ச் விக்கெட் ட்ரை பண்ணுவோம். Let's take this example, then I will keep the floor open. Short term capital gains, STT paid, date மட்டும் கரெக்டாக செக் பண்ணிக்கோண்ணா. 11th May 2024, 50 lakhs, tax rate 15%. கரெக்டாக தானே? ஒன்றும் டவுட் இல்லையா? ஏன்னா எனக்கே டவுட் சில சமயம் அப்படியே போடும்போது மிஸ் பண்ணிட்டு போகணும். STCL, STT paid, 11th June 2024, 100 lakhs. If it is a gain, it would have been taxed at 15%. Short-term capital gains land 13th January 2025, 50 lakhs, 30% is the normal rate of tax, assuming you come into the last slab rate. STCG, STT paid 11th January 2025, 50 lakhs, 20%. Short-term capital loss, how you can set off the same? Short-term capital loss. You can set off against both short-term and long-term. Consistently, the department has been losing the cases here because they say that all STT paid should be first grouped and then you should go to the other. Because if you go to 70, it will say similar method of computation. That's why today's class or session had got one very important point. We consistently been trying to distinguish between computation and tax. Please understand that 70 also uses the word similar method of computation. Short-term capital gains computation is covered by 48. Tax payable alone is there in 111, which is chapter 12. Computation for short-term capital gains for every capital gains covered by 48. Therefore, the courts have consistently said computation of capital gains as per 48 to 55. Don't bring tax payable under chapter 12. So that means even if tax rates are different, I can address a short-term capital loss in a manner in which is most beneficial to me. So here that 100 lakhs of loss where you should adjust first. So don't try to group, don't try to put in your compute tax and all, don't try to put this consolidated capital gains for easy calculation and all. Try to do a detailed calculation. You already have a Bombay judgment saying if utility does not permit, utility cannot do this. Utility cannot stop your legitimate tax benefits. Bombay judgment, fantastic judgment. You cannot use the utility to create your own law. Law, buddy, short-term capital loss can set off. Now with 100 of loss, no doubt you can set off against that 50 of land, right? Now balance 50 is there. Now balance 50 where you can adjust. Now my 11th January STT paid is going to attract 20% tax. My 11th May 2024 will attract only 15% tax. So therefore, after adjusting against the land, you can adjust a similar computation also in a manner which is most beneficial to you. Adjust that 100 against the last 50, not the first 50. Be careful. 22nd July 2024 வரைக்கும் நம்ம tax rate different. The compute tax law, the order of set off இருக்கும் கரெக்டா அது தனி இதுல இருக்கும். அண்ட் நீங்க அந்த கம்ப்யூட்டர் டாக்ஸ்ல ஒழுங்கா நீ பார்க்கலன்னா அது டிஃபால்ட்டா அதுவே கொடுத்துரும். ஏன்னா உனக்கு முந்தின பார்த்தோம் ஒரு டிஃபால்ட் கொடுத்தாலும் அதே எடுத்துட்டோம். You ought to go there and make the adjustment in computer tax if you are doing through a software. I don't know any other software, I know. But you ought to be carefully doing this. Because the tax rate of long-term capital gains up to 22nd July is 20%. After that, 12.5%. Therefore, you should adjust the loss first with that capital gains. அந்த கால்குலேஷனை ரொம்ப கேர்ஃபுல்லாக போடுங்க. இந்த ஐடிஆர் ரிட்டர்ன் தான் வந்து உங்களுடைய பெஸ்ட் டேலண்ட்டை கொண்டு வரதுக்கான கரெக்டான ஆப்பர்ச்சுனிட்டி. Just needs some tremendous amount of calculation and all this stuff. Here, the adjustment should be like this. This 50-100 has to be first adjusted with 13/1/2015 land, then 11 January, leave that first 50 lakhs so that you pay 15% tax. அது மட்டும் இல்லை, you know that ceiling of long-term capital gains has gone up from 1 lakh to 125. Now that 125 is for the full year. But up to 22nd July, what is the amount? It's only 1 lakh. After that it is 1,25,000. But again, try to adjust that extra 25,000 in such a manner where you get the maximum benefit. What we have discussed so far is only for 1 or 2% of the changes made. So if அது ரெண்டு பாயிண்ட் தான் ஆக்சுவலாக. ஸோ அகெயின் பைபேக்லாம் நான் எடுக்கல. பைபேக்லாம் பேசினா நம்ம 4 hour போகும் ஆக்சுவலாக. கான்ஷியஸ்லி அவாய்ட். தட்ஸ் வை எம்பி ஆல்சோ டிசைடட் டு கிவ் an opening. ஒரு பெரிய ஒரு ஃபென்டாஸ்டிக் சேஞ்ச். See, the intention is good. Please understand. They wanted to really simplify. There's no doubt about it. Maybe it could have been taken through a consultation route. போட்டு கொஞ்சம் talent error போட்டு பண்ணிருக்கலாம். I always feel your changes should always be made only from the first day of the year. Never do it in the middle of the year. Because if you do in the middle of the year, that too of this kind of a complexity, surely I think we will have some exciting times from the point of view of professionals. I think, but their point of view, like the common man finds out, see, a lot of people think that as if we have tried to bring something out of nothing. I will leave it to you whether I am trying to take mole or mountain out of mole, or really there is a mountain. Thank you very much for your wonderful opportunity.